$30 million in a single day, flowing into one cryptocurrency that most people still sleep on. While Bitcoin and Ethereum grab headlines, something's brewing with Hedera Hashgraph, and the smart money is already positioning themselves. The charts are screaming. The institutions are loading up. And if you're not paying attention right now, you might miss the setup of the month. Let me show you what's really happening. Welcome back to the channel. If you're new here, I break down the crypto market without the hype and without the BS, just data, analysis, and actionable insights. Do me a favor, smash that like button right now, and if you want to stay ahead of the next big moves in crypto, hit subscribe and turn on notifications. Trust me, you don't want to miss what's coming. Now let's dive in. Hedera Hashgraph is making serious noise right now. According to Altcoin Buzz, a popular crypto analyst, the HBAR spot ETF just witnessed $30 million in inflows in a single trading day. That's not retail FOMO, that's institutional money flooding in. And when institutions move, they don't do it for fun. They do it because they've done their homework. At the time I'm recording this, HBAR is trading at 19 cents with a 24-hour trading volume of $553 million. Market cap sits around $8.13 billion. Now here's where it gets interesting. Despite a 7% dip in the last day, the fundamentals are screaming bullish. Volume is up, ETF inflows are exploding, and the technical setup, chef's kiss. But before you rush to your exchange, let's talk about why this matters and what could go wrong. Because in crypto, euphoria without context is how people get wrecked. According to data from Sentiment, weighted sentiment for the token has spiked sharply in recent days. Everyone's getting excited. Social media is buzzing. Canary Capital's spot HBAR ETF just started trading this week, and suddenly everyone's an HBAR expert. But here's the problem with sentiment spikes. They're double-edged swords. When everyone's bullish, who's left to buy? History shows us that sudden surges in investor enthusiasm often mark local tops, not bottoms. Remember Solana in November 2021? Everyone was euphoric at $260, then it dumped 90%. I'm not saying HBAR will crash, but ignoring sentiment extremes is financial suicide. Now, add another layer of concern. The Chaikin Money Flow indicator, which measures actual capital movement, tells a different story. Despite the price rally, CMF data shows no corresponding surge in inflows. Think about that for a second. Prices going up, but institutional money flow isn't confirming it. That's like watching a rocket launch with no fuel gauge reading. It works until it doesn't. According to the data, low inflows paired with heightened network activity often signal an overheated asset. This imbalance typically precedes short-term reversals as traders lock in profits and liquidity dries up. So, we're sitting at a crossroads. Either fresh capital enters soon and validates this move, or we get a nasty correction that traps late buyers. CryptoPulse, a well-known analyst, dropped a chart update that caught my attention. According to CryptoPulse, HBAR has bounced back nearly 100% from its significant drop earlier this year. Even better, the price is holding strong at the critical 16-cent support level. And that support level, it's not random. It's been tested multiple times, and each time, buyers stepped in aggressively. Here's my take. If HBAR holds above 16 cents going into November, we could see a violent move to the upside. That level acts as a foundation for the next leg up. Break below it, and we're likely revisiting 12 cents. But hold it, and suddenly that 30 million in ETF inflows starts making a lot more sense. The fact that an ETF exists for HBAR is massive. ETFs bring legitimacy. They bring institutional access. They bring boomers with retirement accounts who can't figure out MetaMask. Canary Capital launching this ETF isn't just noise. It's validation that serious players see long-term value here. And speaking of long-term value, this is where Hedera separates itself from the meme coin casino. While everyone's chasing dog coins and hoping for a Binance listing, Hedera is out here solving actual problems. EQ2I Labs and Accenture just announced a major AI agent governance solution built on the Hedera network. This was showcased at the NVIDIA GTC conference in Washington, D.C., and it's not some vaporware pitch deck. It's real infrastructure for governments and enterprises. According to the announcement, this AI governance system addresses the growing complexity of scaling autonomous AI agents across public and private sectors. Translation: governments need verifiable trust layers for AI, and Hedera is providing it. The solution uses Hedera Consensus Service for real-time validation and auditing of AI workflows. That's not speculative, that's revenue-generating utility. Paul Rapino, Senior Vice President of Enterprise Business Development at HBAR Inc., this solution offers a new system of record for mission-critical AI workflows. You know, this isn't Hedera's first rodeo. Back in October, the Hashgraph Group partnered with UAE-based BAT Group to launch a Hedera-backed identity management platform. Switzerland, UAE, enterprise partnerships with Accenture. This isn't a speculative moonshot. This is a blockchain with actual adoption, solving actual problems for actual institutions. Let me break this down simply. HBAR is at a critical juncture. The technical setup is bullish. The fundamental developments are objectively strong. The ETF inflows are real, but the warning signs are flashing too. Sentiment is overheated. Capital flows aren't confirming the move yet. And short-term corrections are always possible when hype outpaces fundamentals. My strategy? I'm watching that 16-cent support like a hawk. If we get a pullback to that level with strong volume defense, I'm adding to my position. Why? Because that would confirm institutional accumulation, not retail FOMO. Institutions don't buy the top. They buy dips and let retail chase pumps. On the flip side, if HBAR breaks above 22 cents with volume confirmation and CMF starting to tick up, that's a breakout signal. That's when laggard capital rushes in and momentum traders pile on. That's when we could see a rapid move toward 30 cents or higher. But here's the thing, most crypto YouTubers won't tell you. You don't have to catch the exact bottom or top. You just need to position yourself with favorable risk-reward. Buying at 19 cents with a stop at 15 cents gives you a 4-cent risk. If the move goes to 30 cents, that's an 11-cent gain. Almost 3-to-1 risk-reward. That's how professionals think. Why isn't HBAR pumping harder if all this news is so bullish? Simple. Market timing. The broader crypto market is in a weird spot right now. Bitcoin's consolidating, Ethereum's underperforming, altcoins are bleeding against Bitcoin. Until BTC makes a decisive move and altcoin season truly kicks off, most alts will struggle regardless of fundamentals. That's why the ETF inflows matter so much. 30 million in one day during a choppy market. That tells me institutions are positioning ahead of the next bull leg. They're not waiting for confirmation. They're front-running it. And if history teaches us anything, it's that following smart money, not social media sentiment, is how you actually make money in this space. The risk is clear. Now it's up to you to decide if this fits your strategy and risk tolerance. If you found this analysis valuable, do me a huge favor and drop a comment below with your thoughts on HBAR. Are you bullish, maybe bearish, or are you already holding a bag? I read every single comment and honestly, I love hearing your perspectives. Also, feel free to check out my other videos where I break down the top altcoins for the next bull run. I've got deep dives on projects that could genuinely, like 10x from here. Don't forget to like this video, subscribe to the channel, and hit that notification bell so you never miss an update. The crypto market moves fast, and staying informed is really the difference between catching life-changing gains and just getting left behind. Thanks so much for watching, and I'll see you in the next one. Stay sharp out there. Quick reminder here, nothing in this video is financial advice. Cryptocurrency is extremely volatile and risky. You could lose everything you invest. Always do your own research, never invest more than you can afford to lose, and definitely consider consulting with a licensed financial advisor before making any investment decisions. Trade safe, everyone.